Hello everyone, welcome to BEC Talks. My name is Prince Khan and I'm from the Brampton Entrepreneur Center. And today we will be discussing the topic of tax tips for small business. Before we begin, I want to introduce to you our very special speaker for today. His name is Gerry Hogenhout, and he's the owner of Hogenhout and Associates. Gerry has volunteered for a very long time with our center, and he has done a lot of work for us with our entrepreneurs. Gerry, I want to welcome you to the show, and I really appreciate you taking time out of your day to be with us here today.
Well, thanks you very much for having me. I look forward to the opportunity.
My pleasure. All right, Gerry. So the very first question I have for you is we really want to learn a little bit about who you are. So I want to learn a little bit about your business, what you do for entrepreneurs and small business owners, and what has your experience been in terms of taxation. Could you tell us a little bit about that?
Sure, absolutely. I'm a chartered professional accountant by trade. I started my tax career, accounting career, about probably 35 years ago. Articled with Deloitte Touche, chartered accountants. Spent 10 years with them. Great place to learn the business, learn the trade. But certainly, my goal was always to have my own business. I was, always considered myself a bit more entrepreneurial than working within a structure. So once I learned what I, wanted to learn, and once I had my large firm experience, it was a good opportunity to spread my wings and start my own company, which I did. So I started my own public accounting firm. And after about 5 years, I branched off into the investment management side also. So I basically wear two hats, one being the tax hat, and I also have an investment company that I'm very active with, and is basically more of my business. So that's a brief background. So
very nice. I never you actually focus on investments as well. That's
it's my primary it's my primary role in my company. Even though we do a lot of corporate tax and personal tax. And certainly what I did learn, one thing I learned at Deloitte Touche was the need to give back to the, I know with Deloitte Touche they would be happy to take the accounting students in and teach them what they had to teach. And I remember that, and that's certainly something I want to continue as far as providing guidance and help to entrepreneurs. So opportunities like this are great. And I appreciate it. I think it's important that people like myself give back to the community in these ways and help people realize their dreams.
And we really appreciate that. I know you've done a lot for our center, and you've always been there for us when you needed you. Yeah. And I just want to say thank you so much.
Yeah, you're welcome. Very welcome.
So Gerry, I have a number of questions I had in mind, and I know a lot of entrepreneurs that come see us at our center have these questions, but sometimes we just don't have the answers for them. So we're trying to get the point across where we're trying to make this video so they're able to understand tax tips without having to go to an accountant. Give them something that's available online. So the very first question we generally get is the differences in terms of taxation for a sole proprietorship, partnership, and a corporation. Could you tell me a little bit about that?
Yeah, absolutely. Corporation basically means it's separate, it's its own legal entity. Okay. And it has its own tax rates. So when you ask the question about the difference in the tax rates, a corporation pays a lower tax rate than an individual, in theory. So individuals, and again, I like trying to speak in concepts instead of real numbers. I find that people have an easier time understanding. So for example, an individual, their first $10,000 of taxable income is tax-free based on a personal exemption. Up to $50,000, and again, those are approximate numbers. An individual is paying 20% tax. And then it goes to 30 to 40 to 50%. A corporation will pay 15% tax. Okay, so that's much cheaper. So there are tax advantages to earning your income through a corporation. Not to say that that's always the best choice, but there's certainly tax savings and tax benefits to earn that income through a corporation. So.
Okay, so when would you recommend somebody, again, become a corporation? Like, what is the advantage of somebody, let's say if they're making $50,000 in a year, should they incorporate? Is there an advantage to that?
Yeah, probably one of my most often asked questions, I will admit. It's not so much a dollar number. What people need to realize is there's two main reasons to incorporate. One is the taxes that we just talked about, and there's liability reasons. Okay. Once again, I said that a corporation is a separate legal entity, which means it has its own tax rates, it files its own corporate tax returns. Corporation can own things, it can enter into contracts, and it can be sued,
Yes.
all outside of the individual person. So those are the types of factors that you look into when you consider incorporation. But as far as the advantages, when should somebody incorporate? The general rule of thumb is if you make more money than you need to live on. And sometimes that takes a little while to grasp. And what I mean by that is it's not necessarily a dollar figure. It's not if I make $50,000 I should incorporate. If I make $100,000 I should incorporate. It really means if you make $50,000 and you need $50,000 to live on, meaning you'd have to take all that income out of the corporation
Correct.
anyway, there's not much tax advantage to having a corporation.
Correct.
If your corporation made $100,000 and you needed to pull out $60,000 to pay your living expenses, you have what we call excess earnings. Okay, so those excess earnings could be taxed at a much lower tax rate. And there is the advantage in having a corporation for tax reasons.
Gotcha. And is there some sort of threshold that's in place for this corporate rate that you get?
Yeah, you get the 15% corporate tax rates for the first $500,000
Wow.
of taxable
Okay.
income. So, those that are paying the rate above that, which is 50%, we consider them lucky.
For sure, absolutely.
But for the first $500,000 of taxable income in a corporation, we're paying 15% tax, which is a great benefit for small
Yeah.
businesses if they earn excess income over and above what they need to draw out of the corporation.
Which is phenomenal. I mean, it's a great way to save tax. Again, it's all based on your living expenses. So if you live a simple life, then obviously there's more savings then.
Yeah, and the logic there is the low corporate tax rate it is there to encourage businesses to retain that income, pay the 15% tax, and reinvest that money back into their corporation.
Correct.
And in a perfect world, that would mean that the money they reinvest back into their corporations will increase the activity of the corporation. They can buy machinery with that. They can hire additional people. So in a perfect world, that low tax rate is used to stimulate corporate growth, which stimulates the economy.
Absolutely. And in terms of filing your taxes, I know with a sole proprietorship, you just file it as yourself, but as a corporation, you have to file two tax returns. Essentially, is it more expensive to file a tax return with a corporation, or, is the cost almost the same?
No, it is more expensive, and that's why when people look at the, when they look at the decision to incorporate or not to
Correct.
incorporate, there are advantages, there are disadvantages. We spoke of some of the advantages, but it is more costly. So, you're paying more at the end of the year to have your corporate taxes filed than you
Correct.
would your personal taxes. You're incurring upfront one-time costs to incorporate. There's the maintenance of the corporation. We have to
Correct.
file annual minutes. So there are extra costs. So I always caution entrepreneurs, that make sure that the advantages outweigh the disadvantages.
Correct.
And another way to say it is the extra cost that you incur to operate through a corporation, hopefully you are saving that amount in income taxes as a minimum.
Absolutely.
So at least those costs are offset by the savings that you would have by incorporating.
That's a very good point. I
Yeah.
mean, some entrepreneurs think that you have to incorporate right away because of limited liability, and they don't understand that maybe once your business is up and running, maybe then that's when you should incorporate. In terms of taxation, again, they don't understand that you have to file two tax returns, which obviously could be detrimental to them, especially if they're just starting,
Correct.
right? And they're not making money.
Yeah, so there's a lot of factors. And you touched on the liability. Sometimes that's very important for somebody. I've always said a corporation it certainly doesn't replace an insurance policy, but it is an extra layer of insurance.
Correct.
So if an entrepreneur is starting a business, and let's just hypothetically say they had many, many, many personal assets to protect,
Correct.
there's a case that it would make a lot of sense to incorporate
Gotcha.
to protect the personal assets that the entrepreneur owns. Vice versa, if the entrepreneur does not have many or any personal assets, okay, so we're not really needing to protect those assets, so to have the liability protection of a corporation probably doesn't make as much sense in that case. So many factors, it's just not all about tax. So when people think, as you say, that they should just run out and incorporate, it's good to have a discussion. It's good to understand the reasons why they should and possibly the reasons why they shouldn't. And once they have that information, most people are quite capable to make that decision on their own.
Great point, Gerry.
Yeah.
Thank you so much. We always get this question, so I just wanted to get some clarification.
Yeah,
on
absolutely.
what I should tell some entrepreneurs.
Again, it's probably my most often asked question.
That's great, and that's why it's the very first question we're asking you. Another question we have in mind is the responsibilities to the 3 levels of government. Can you tell us a little bit about that? Like, what do entrepreneurs have to do when they're working with municipal, provincial, and the federal government?
Yeah, good point. Okay, so basically the responsibilities are similar. So just because you incorporate, your responsibilities don't really change compared to a proprietorship or a partnership. We have 3 levels of government: municipal, provincial, and federal. So basically, on the federal government side, we need to file corporate tax returns if we're incorporated. Obviously, we need to file personal tax returns if we're operating proprietorships. We also need, when we register a business, we get what's called a BIN number. It's called a business identification number. And that number serves as your corporate number if you are incorporated. It also serves as your HST number, okay, HST, Harmonized Sales Tax. Okay, so that's a responsibility. I know we'll talk about that a little bit later, but that is one of the responsibilities that we have to the federal government. So that's included with your BIN number. Also included with your BIN number is your employee tax deductions. So if you hire employees, okay, and again, I think we're going to be discussing the difference between hiring and using subcontractors, but if you are hiring employees, you need to file T4s, T4 summaries. So there's another filing requirement for the federal government. So basically, the 2 main ones are the HST, the employee tax deductions, and then if you're incorporated, it's corporate filing. On the provincial side, there's responsibilities for WSIB.
Right.
Okay, so we are required to have coverage.
Correct.
For WSIB, we're required to pay WSIB. As a business owner, that person usually, in most cases, has a choice whether to pay for their own coverage or to exempt themselves from coverage. But most businesses need to be aware that they are responsible for people that they use, whether they're employees, whether they're subcontractors. The easy way to describe the WSIB would be a housing site. So if I wanted to build a house and if I hired a general contractor, that general contractor is responsible for the job site. So they are responsible for everybody that works on there, whether they're employees of the general contractor or whether they're subcontractors.
Correct.
So they have to make sure that everybody's covered. That's part of their job.
Right.
And if they're not covered, they have to provide coverage for them. So that's a big responsibility to the provincial government. So the other responsibility we have to the provincial government, employer health tax.
Correct.
Okay.
Yeah.
So many years ago, we had what's called OHIP, and they would take a quarterly charge out of our bank account. This is going way back. In 91, I believe it was, that they changed that, and they basically introduced the employer health tax. And at the time, they were charging self-employed people. They were charging a lot of businesses. So they basically took the burden of healthcare from the small business. From the person to the small business.
Right.
Long story short, they took it away from small business to a certain degree, put it back on our personal tax returns. But any business that has $400,000 of net income.
Gotcha.
First of all, we applaud them because that's a great number.
Yeah.
Second of all, they are responsible for employer health tax.
Right.
So any small business out there that does achieve $400,000 of taxable income is responsible to pay employer health tax
Gotcha.
to the provincial government. So those are our main responsibilities. Municipal, we are not required to file tax filings with the municipality. I know certain municipalities have different rules and regulations as far as what they require as a registering of a business.
Correct.
But as far as ongoing tax filings, we really do not have any responsibilities to the municipal government. So.
Okay, so it's mainly just the provincial and the federal.
Yeah, mainly the federal.
Federal.
We're probably filing 90% of our tax filings to the federal government, and they disperse it to the various provinces. So, for example, a corporate tax filing, we just file that to the federal government,
Correct.
and then if it's an Ontario corporation, CRA will send the provincial portion of the tax return to, in this case, Ontario. So.
Oh, I never knew any of that. So that's honestly a lot of information.
Yeah.
And it makes more sense to me now, and essentially because now I know that when people talk about dealing with the government, I can tell them, yes, with the federal government, you have to do all this. With the provincial, you have to deal with all this. So talking about CRA, Can you tell me a little bit about corporate assessments and reassessments? I know this is a question sometimes entrepreneurs get as well.
Yeah, they do get a lot, and a lot of them aren't prepared for it. So it's a good question, and I think it's important that a lot of these people know. Personal or corporate, okay, we file a tax return and we receive back what's called the notice of assessment, okay? And that's just basically, most people think that because they receive this assessment that everything is good.
Correct.
Okay, that's not necessarily the case. We file a tax return, we get back a notice of assessment, and that's basically CRA saying, we've had a quick look at your return, but we might look at it again.
Okay.
Okay?
Gotcha.
So when we get that notice of assessment, there's a date on it, and that's an extremely important date because they have 3 years from the date of the original notice of assessment to have a second look at your tax return.
Gotcha.
And that happens a lot. After that 3 years, it's basically statute barred, and they're not allowed to go back to year 4, 5, and 6, unless there's certain provisions. If it's fraud, if it's unreported income, now they can go back to 4, 5, and 6. But just in general terms, once that notice of assessment issued, once we know that date, they have 3 years to go back and challenge any of our methods of accounting. So
Wow.
any adjustments they can make to those returns. Very important, very, very important.
And that's when they do a reassessment if needed.
Yeah, so now if they did a reassessment, that 3-year window starts all over again.
Oh boy.
So what I mean to say is you file a personal tax return and or a corporate tax return,
Yes.
you get your assessment back, it has a date on it. Within that 3-year period, revenue or CRA has a second look at the return and they make some adjustments.
Correct.
They'll send you a notice of reassessment. In most cases, we want some more money.
Yeah.
We don't like the way you did this, or this, so
Yeah.
they want some more money. There's a date on that reassessment,
Oh, boy.
okay? And
Okay.
we have another 3-year window that follows from that reassessment. So it's an important component of tax filing, and it's something people should be aware of, that just once they receive their original notice of assessment, that does not mean
You're
everything is good
scot-free,
with
yeah.
CRA. So.
Yeah, and CRA is obviously a little more complicated than just giving you money. They obviously have to reassess everything, make sure everything is not fraudulent. And you made some really great points, and I appreciate that. Another question we usually get is the threshold of small supplier and the $30,000 limit.
Yeah.
Can you tell us a little bit more about that?
Yeah, so basically the 30,000 limit refers to HST, Harmonized Sales Tax, which is just a combination of our old, what we called retail sale, our provincial sales tax, and our goods and service tax.
Correct, yeah.
So in Ontario, we harmonize that. We call it harmonized sales tax. Any small business that reaches that $30,000 threshold is required to register for HST and collect HST.
Correct.
Okay, if you remain under that threshold, you are not required to register or collect. Okay, and you can't charge. Okay, so you can't charge HST if you're not registered for HST.
Right.
Now that $30,000 threshold, most people believe that that's on an annual basis, and it is, but there's a caveat to it. Basically, it's $30,000 for any 4 quarters.
Okay.
Okay, so what I mean by that, let's just use a simple calendar year basis, year end, January 1 to December 31st. So let's say you did $28,000 of gross sales. It's not net sales, it's gross sales.
Yep.
Okay, so January 1 to December 31st, you did 28,000, you do not need to register. Next year, January 1 to December 31st, you did 25,000, so you don't need to register. But if somewhere in there, from June to June, from June of year 1 to June to year 2,
Correct.
if there's 4 quarters that total $30,000, CRA will say you need to register. So you need to be very careful about that. I've seen many businesses get caught where they are under the radar, or under the threshold, let's call it, but they're 4 quarters somewhere within those 2 fiscal years add up to $30,000. And then what happens? They get a letter from CRA saying you should have registered.
And you
So
don't.
now we want our 13% on all your sales after you should have registered.
Right.
And those things don't work out well.
Do you know of any penalties that are in place?
Yeah, there's penalties for not registering.
Yeah.
So there's penalties based on the tax that you would pay. There's penalties for filing late. Okay,
Oh,
they can
okay.
charge you up to 5% of your tax that you should have paid. And if you're a chronic late filer, the second time they can double that. They can charge you 10%. It really, the message CRA sends and the message I send to these small businesses is be compliant. Okay, understand the rules, understanding your requirements to file, and file. Make sure you're filed on time, because
Right.
CRA can be your best friend, but they can be also your worst enemy. And it's usually the people I find that are non-compliant in filing that are running into all the problems with CRA.
Right.
And I know it's hard for a small business starting out, to make sure that they're filing within all the deadlines that are required, but there's lots of information available through the internet, through small business enterprise centers, through accountants. There's a lot of information out there. So I know most entrepreneurs are very hungry to hit the ground running and
Right.
do what they do, but they got to realize that there's responsibilities to that, and if they don't uphold those responsibilities, the consequences are not good. So
It's better to be safe than sorry.
Absolutely.
And most entrepreneurs should know that.
Yeah.
And shouldn't try to cheat the system, because you never know
no,
when they'll
that's,
come after you.
no,
Right?
that's true.
So another question I have for you is expenses. Obviously, it's applied against the sales you make. So can you tell us a little bit about the types of expenses you can write off? Where can you really save as an entrepreneur?
Yeah, I mean, expenses, I mean, the way I try to talk in concepts. So when I try to explain income statements, I go sales minus expenses equals net income. And then
Yep.
people gear on the expenses. What expenses can we deduct? Most of the expenses are self-explanatory. Most of the expenses you can easily identify that is an expense that I've incurred to generate a sale.
Gotcha.
And most of them are very self-explanatory. Lots of gray areas in what expenses we can deduct. Okay, in a perfect world, I mean, I've always said, we need a place to live, we need to eat, and we need a vehicle. So
Correct.
if we can take some of those expenses that we all have to incur every day, and if we can make some of those expenses tax deductible, that would probably help us.
Correct.
So again, when I say most expenses are very self-explanatory as far as the deduction against your income, like if you're selling a product, you're going to buy the product, you're going to mark it up, and you're going to resell it. That's pretty self-explanatory.
Yeah.
But when we get into these gray areas about a car, an office, and home, the food that we eat, those we have to look at a little more closely. Yes, you're allowed to deduct your vehicle if it's for business use. CRA has very strict guidelines. You need to maintain a log. You need to be able to prove the percentage that you're using your car or vehicle for business purposes. Too many people are guilty of just pulling a number out of the air at tax time and saying, oh, well, I use my car 80% of the time. That's okay for filing a tax return. It's not going to help you during a post-assessment audit. So, you need to be able to prove to them where you arrive at these numbers. The food that we eat, you are allowed to claim some of the food. Basically, they have a restriction that only 50% of the food of the tax deductible meals and expense are deductible. So
Gotcha.
there is some provisions there to allow you to take somebody to lunch, buy that lunch, claim that expense as a business
Right.
expense. Office and home, lots of us have office and homes, so the Income Tax Act supports us in making those deductions. Have to be reasonable. They usually do it on a square foot basis or a per room basis.
And what expenses would be, I guess, examples of things you can write off?
Yeah, so basically any of the costs associated with your house, so the big one obviously is the mortgage. So you can't deduct the entire mortgage payment. You have to separate it between principal and interest. So the interest portion of your mortgage payment can be applied to your home expense. So we have our interest expense, our heat and hydro, our repairs and maintenance, our insurance, anything else, any costs that are associated with our home. We are required to calculate all these costs and then determine what portion of that home relates to business.
Gotcha.
And once again, we need to be able to prove that. So it does allow us, again, for when I say we need to eat, we need a car, and we need a home, it does allow us to create some of those expenses and
That makes
convert
sense.
them to business expenses.
That makes sense. So could you tell me a little bit about working part-time versus working full-time as an entrepreneur? Let's say somebody's working full-time and they have a part-time business, right? What are the tax implications there? I mean, I get that question a lot, to be honest with you. And could you touch on it a bit?
Good question. So again, we kind of go back to, I'll start answering this question by why do people set up businesses? Okay, they do it for one of two reasons. One, they want to make money. Others are lifestyle, simply lifestyle. So, and usually everybody's somewhere in the middle. So when you start a part-time business, that's fine. But if you are unincorporated, if you are a proprietorship, whatever you're earning on that part-time business, again, is just going to go on your personal tax return over on top of the income you already earn. So if you already earn income from a regular job, that pushes you into a different tax bracket. Now you have a business on the side, that income will go right on top of that other income, and it could very well be taxed at a much higher rate than you want it to be.
Correct.
And that conversation would lead us possibly into incorporating, to take that extra income and put it into a corporation and pay the 15% tax. So again, anything we're doing as a proprietorship is just going to end up on our personal tax return on top of our own other income. And when we talk about part-time businesses, again, when I say that some people, start their businesses, they want to make money, the other is lifestyle. An example would be somebody that's retired.
Correct.
Okay, so somebody's retired, they have a wonderful pension, they have lots of money, and they start a business on the side. So they don't need that business for money, they do it just because they need to occupy their time and they just want to be involved in the community, so they start a business. Those types, we always caution that, okay, so you've got a lot of assets to protect, number one. You're earning this business on the side that's going to go on top of all your other income and pensions and everything else. There's an example that probably an incorporation would serve two purposes. One, protecting the assets that these people have on their own, and having that part-time income taxed at a low corporate tax rate. That's assuming they make income. Now, some businesses don't make income. So if we generate a loss on our business, then we are allowed to deduct that against our other income.
So the employment income.
The employment income.
Wow.
So,
okay.
Yeah. So there's, once again, we go back to, do I incorporate? Do I not incorporate? If you are unincorporated, i.e. a proprietorship, and if you have a business loss, you probably do not want to be incorporated, because that business loss will just go on your personal tax return. And if you have other income from other sources, it will actually reduce that income. So in all probability, you'll be getting a tax refund. So there's some planning, and it's not uncommon for businesses to experience losses as they start a business venture.
Yeah, absolutely.
So the whole transition to a corporation can be done at any time in someone's business life. So to start off as a proprietorship and progress into a corporation is a very common trend.
Absolutely. Well, actually, I never knew about the incorporation and employment side of things. That's interesting. I can definitely talk to my clients a little bit more about that
great,
now. So, types of taxes. So there's different types. So zero rated, exempt, and taxable. Can you touch a little bit about that?
Okay, so what you've just described there is HST.
HST, yes.
Okay, so yes, there are different types of taxes. HST is one of them, harmonized sales tax, which you've just touched on before. But underneath that HST umbrella, there, as you mentioned, there are three types of taxes. One is what we call zero rated, one is what we call taxable, and one is exempt. So what it basically means is, if you are zero rated, it basically means you do not charge HST, but you can claim back the HST that you paid on your goods.
Oh, wow.
Okay? And the more common items that would fall into that category are groceries and prescriptions. So you walk into the drugstore, usually the prescriptions, they're not HST taxable. They would be zero rated. Groceries, most groceries, not all, but 90% of your visit to the grocery store, you're grabbing zero rated goods. So you're not paying HST at the counter, but the companies are able to reclaim their input tax credits on anything that they claim. So that we call that zero rated. We also have exempt products. Okay, so these products just completely exempt of tax. So even if you went beyond your $30,000, you do not need to charge HST. Some examples of that, financial services, certain financial services, music lessons for some reason, I'm not quite sure why that's in there, but it's not a long list, but there are certain things that are exempt. Certain trucking industries are exempt, depending on if it's an owner-operator.
And do you know the reason why this is?
You know what? I don't. I don't understand why they've made it as complicated as they have. The zero rated, I could see that they didn't want to add the 13% to groceries to possibly lower people's grocery bills. Why other things are exempt of tax, why there's no HST on music lessons, I have no idea. So I don't know the answer. The third category we have is taxable,
Yeah.
and most businesses fall within that category. And then we go back to what we discussed before. If you reach that $30,000 threshold, you are required to register, you are required to collect HST,
Yeah.
you are required to remit HST. When you reach that threshold, you will get that BIN number that we spoke about earlier, business identification number.
Correct, yeah.
That becomes your HST number.
Okay.
Okay, so
Gotcha.
that's your number. You have to put that number on your invoice. So anybody that's charging HST has to have their BIN number on it. Anybody that receives an invoice from somebody should look at that invoice and make sure that there's a BIN number on it.
So what if there's no number on there? What happens?
Technically, you're not required to pay it. So if I get an invoice from somebody and they've charged me $1,000 and added 13%, so I owe them $1,130, but there's no BIN number on there, it would be prudent of me to question why there's no business number on there. And one of two things happen: either they don't have one, so they're just adding 13%, which is totally illegal, or they have one, or they just haven't put it on the invoice. They might they might not know that. So. Buyer beware. So there should be a BIN number on every invoice that has HST on it. So when we say zero rated, taxable, or exempt HST, 95% of the business would fall under taxable. And there's certain these little quirky provisions that have zero rated and
The complicated ones.
well, complicated, they're not complicated to me. They're complicated to other people that don't deal with this on a day-to-day basis, but I call them little quirky situations where, for whatever reason, they've made them zero rated or exempt.
Gotcha.
And I don't know why.
Incredible. I have one last question for you, Gerry. I know earlier we talked about employees versus subcontracting when we talked about the province. Can you tell us about the differences between the two in terms of tax purposes?
Yeah, this is a very big issue, has been for a number of years and continues to become a bigger issue every year. That is the subcontracting versus employees. So a typical scenario, a business starts up and they need some assistance. So they use the services of somebody, which is a different way of saying hiring somebody, so we'll say they use the services of somebody. If it's a one-off, that's not a problem. Here's your hourly rate, here's the amount of hours you worked, here's your check, give me an invoice, here's your check. What Revenue Canada or CRA was uncovering that many people were using the services of people more on a full-time basis, but not hiring them as employees. So they would just use them as subcontractors. And so CRA, obviously, they want everybody as employees. I mean, because then the employer has to withhold the income tax, the Canada pension, the unemployment insurance, and remit that monthly to CRA. So in a perfect world, CRA would want everybody as employees. There are provisions that do allow people to use services on subcontracting. So there are guidelines. They're a little vague. They're not black and white. And the two main things that we use to differentiate between subcontracting as employees is the control of the hours and the money that the person earns. Gotcha. So when I say control of hours, if I say to you, Prince, I need you to help me next week. I need you here Monday to Friday, and I need you at the office at 9, and you're expected to work till 5. Okay. I'm controlling your hours. Okay, so CRA right away would say Prince has to be on my my payroll.
Yeah.
Okay. And so again, control of hours is huge. Now, if I just said to you, Prince, I need you Monday 9 to 5, and then for the rest of the week and the rest of the month and the rest of the year, you can do whatever you do.
Right.
They're not going to care about that one day. So they're looking for consistency. So if I'm continuing to use you, if I'm continuing to control your hours, they're going to come in and they say, you should be an employee. They also look at the income. So if you earn 100% of your income from me, correct, they're going to want to see you be an employee of me. So we look at the income, we look at the control of hours. And Revenue Canada, or CRA again, I keep correcting myself. It used to be Revenue Canada, now called Canada Revenue Agency. They're very active, very, very active in this area. They are really auditing many businesses to ensure that those that should be employees are employees, and those that, you know, are allowed to be subcontractors are subcontractors.
Mm-hmm.
Very, very big issue. Lots of responsibilities to the employer. By hiring somebody as an employee. They, again, as I mentioned, they got to withhold the tax, the East Canada pension, the EI. The employer has to send in their portion of Canada pension, their portion of EI.
Correct.
So, you know, there's some costs involved with an employer using the service of somebody as an employee. So, but there's lots of, I mean, there's fines. I see, again, CRA very aggressive in this area, and if they catch you where you should have somebody as an employee, they're very quick to fine those businesses, and those fines are substantial.
And you suggest somebody speak to an accountant or somebody from CRA before they start, I guess, subcontracting?
Well, again, we don't find that there's a problem initially. So if I said to you, Prince, I need you Monday to Friday, 9 till 5, you know, if that's how we started our business relationship, we haven't, you know, crossed too many problems. But if I continue to use you,
correct,
then now we're creating a problem. So, you know, it's just something that entrepreneurs need to be aware of, that if they use the service of somebody too much and too regular and are paying them most of that person's income, they need to change that relationship
to payroll,
to an employee. Yeah,
makes a lot of sense. Again, Gerry, thank you so much for coming on the show today. I really appreciate it, and your advice is going to be valuable for all of our entrepreneurs at our center and all the entrepreneurs within the city of Brampton. So thank you so much.
Yeah, well, again, thank you very much for having me. I really appreciate the opportunity to help these businesses in their business ventures. So.
My pleasure. We're definitely going to have you back to do some more volunteer engagements.
Awesome,
so
yeah.
hopefully some of our entrepreneurs can meet you face to face.
Great, awesome.
Thank you, Gerry.
Thank you.
No problem.
Take care.
Well, that's it for this month's edition of BEC Talks. I hope you enjoyed it. Stay tuned for next month's edition on tech and innovation, where we discuss technology-based businesses with other entrepreneurs who have actually started their own company within Brampton. Until then, take care.